Welcome back to Iraqi Dinar News, where we bring clarity and precision to the world of global currency investing. Today's update centers on a question that's creating serious buzz among investors. Which currency is poised to revalue first in 2025? The Vietnamese dong or the Iraqi dinar? If you're holding either or both, this breakdown could shape your next financial move. With real data and up-to-date insights, we'll walk through the developments that have investors watching closely and waiting for what could be a life-altering shift. First, let's establish what revaluation actually means. When a country officially increases the value of its currency relative to others, that's a revaluation. It's not based on hype. It's usually tied to economic performance, foreign reserve balances, trade agreements, or political progress. For those holding large amounts of undervalued currency, a revaluation could convert a modest investment into substantial profit. Both the Vietnamese dong and the Iraqi dinar have remained low in value for years, fueling speculation that one of them might experience a sharp upward correction. The big question now is, which one will move first? Currently, the Vietnamese dong trades at around 23,500 per US dollar. That means roughly $1,000, 0 cents, would yield you about 2.35 million dong. While the rate hasn't changed much recently, Vietnam's economy has surged forward. Over the past 2 years, it posted strong GDP growth, increased foreign investments, and strengthened trade deals across Asia and beyond. The country is becoming a preferred hub for global manufacturing, particularly as companies shift production away from China. If this momentum continues, it's no surprise some analysts believe the dong is undervalued and may rise sharply. Now consider the Iraqi dinar, which trades at approximately 1,310 dinar to $1 US. Iraq's economic progress has been slower but meaningful. With vast oil reserves and major infrastructure investments underway, the country is gradually repairing its financial systems. The Central Bank of Iraq has taken bold steps to tighten inflation controls, streamline banking operations, and increase reserves. Some insiders argue that if Iraq continues partnering with international organizations and advances its economic reforms, a revaluation isn't far off. In 2024, Vietnam's GDP grew by more than 6.5%, while Iraq posted about 3.2%. That's a significant gap. Vietnam's upward movement is driven by strong export performance, industrial growth, and expanding tourism. Iraq, in contrast, remains more dependent on oil markets and political stabilization. As a result, investor confidence leans slightly more toward the dong for now. Foreign investment tells a similar story. Vietnam continues to attract tech firms, clothing manufacturers, and electronics producers who are injecting foreign capital into its economy. Iraq is seeing increased interest as well, especially in oil, construction, and telecom sectors. Still, Vietnam's broader range of industries gives it an edge in currency strength and reliability. Both countries have taken noticeable steps through their central banks. Vietnam's monetary authority has maintained stability, keeping inflation under control and managing interest rates with care. Meanwhile, the Central Bank of Iraq, CBI, has been more aggressive. In 2023 and 2024, the CBI enhanced its dollar auction procedures, enforced tighter controls to combat money laundering, and modernized the banking infrastructure. These moves have restored some investor faith in the Iraqi dinar, but a full-scale revaluation likely requires additional signs of political and regional stability, something still in progress. Political environment is another area where Vietnam currently has an edge. It enjoys relatively low internal unrest and consistent government support for economic growth and trade expansion. Iraq continues to navigate challenges including protests, shifts in leadership, and ongoing regional tension. Stability plays a critical role in whether a currency can gain ground in value, so while Iraq is improving, Vietnam currently feels like the safer choice. Still, all it takes is one major breakthrough for Iraq to surprise the global market. Online forums and social platforms are filled with speculation. Some argue the dong is ready to make the first move, citing its economic consistency. Others insist the dinar has been suppressed for too long and is overdue for correction. But here's what matters. Governments don't announce revaluations in advance. They happen without warning. That's why seasoned investors prepare in advance and track official updates instead of chasing rumors. In currency markets, timing is everything. It rewards those who stay ready, not just those who react quickly. Let's break down an example. If you invest $2,000 into dong at 23,500 per dollar, you'd receive about 4.7 million dong. If the rate improves to 20,000, that value becomes $2,350.00, a gain of 17.5%. Now apply that same $2,000.00 to dinar at 1,310 per dollar. You'd receive 262,000 dinar. If the rate improves to 1,000, your value rises to $2,620.00, a 31% increase. The potential is greater with the dinar, but the probability today may favor the dong. It's a balancing act of risk and reward. That's why 2025 could become such a pivotal year. Vietnam's consistent development and Iraq's reform efforts are converging at a time when global markets are more focused on emerging economies. Investors are watching inflation metrics, interest rate decisions, and central bank movements for clues. Long stretches of silence often precede major currency events. And that silence is starting to break. Community sentiment remains hopeful. Some investors have waited over a decade, while others just entered the space hoping to catch the wave. Whichever group you're in, staying informed is your greatest asset. Knowledge is what helps you stay steady when markets get noisy. Learn how currency systems function. Know your exit plan. Prepare before revaluation becomes reality. If a revaluation were to occur, it wouldn't be announced like a lottery. It would most likely be a quiet shift in central bank policy, followed by quick changes in exchange windows. Banks might freeze transactions briefly while new rates settle in. For those holding physical currency, preparation is essential. Know where to go, who to trust, and how to protect your gains. Ignore the false claims that Iraq must revalue to join the WTO or that the IMF is forcing action. These organizations may advise and cooperate, but they don't dictate revaluation. Iraq's currency value is under its own control, and policy changes will happen only when leadership feels it aligns with their national goals. That said, continued cooperation with these global bodies does improve Iraq's chances over time. As always, investing in foreign currencies carries risk. The dong or dinar could remain low for years or even fall further. That's why responsible investors use only capital they can afford to lose and never act on fear or hype. Patience, diversification, and research are your best tools in this space. With 2025 unfolding, both currencies are under the microscope. Vietnam is expected to sustain growth thanks to tech, trade, and tourism. Iraq is pushing forward with reforms, increasing oil exports and showing signs of serious financial transformation. These are not just theories anymore, they're movements. If they continue, we may be looking at major news by the end of the year. Some investors are doubling their positions, others are holding and watching. Wherever you stand, dong, dinar, or both, this might be the year where preparation meets opportunity. Stay alert, stay informed, and keep your strategy sharp. Thanks for tuning in to Iraqi Dinar News. If this breakdown helped clarify your next move, hit that like button, subscribe for ongoing updates, and share this video with fellow investors. Drop a comment and let us know, are you holding dong, dinar, or both? Until next time, stay smart and stay ahead.